Good morning, ladies and gentlemen. This is a Kickstart video for January 9th, 2024, where I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. We'll start like we always do, looking at the euro versus US dollar. I got the hourly chart up here. In trading yesterday, the dollar moved lower with you had interest rates moving lower. We had stocks moving higher. Then it came down toward the end of the day and shifted bias more to the downside here. Trading here today, we are seeing the 10-year yield now up about 3.6 basis points. The U.S. stocks are lower with the Dow Industrial Average down about 170 points, and the NASDAQ is down about 130 points after yesterday's rise of 319 points. So a reversal of the those markets, and what we're seeing in 2024 is that rates move higher, the dollar moves higher, and stocks move lower, and that's a pattern that we're seeing in trading here today. So looking at the euro versus US dollar, the move to the downside has taken the price to a support target. That target comes around this 1.0929 level, and if you go back in time and look at this area, you can find a swing high right through here, swing high, ceiling area through here where the market found a ceiling and then moved above that level and used that level as a floor through here before moving to the upside and trading more recently. The price traded above and below this level. We did find a ceiling, try to hold the ceiling right through here, and then moved above and used it as a floor through here. Fell below it again. So the market, you can see the volatility up and down. This is from yesterday's trade. The market tried to move below that level, but could not get very far, and then rotated to the upside. That really started the whole move back to the upside here in the euro versus US dollar, along with some fundamental news in trading here today. We are moving back below, and what do? We found support against that old support level again at the 1.0929. So there is some reason to think that, well, maybe we've seen the bottom here. We have higher lows, so on and so forth. But the price is trading above and below the 100-hour moving average. That comes in at 1.09396, and that is often a barometer for my trading. At least you want to see the price stay above that level to keep the buyers more in control. If we move back below, we obviously have to get below the 1.0929 level to increase the bearish bias. So watch this level on the top side. The high prices in trading here today did stall against this swing area through here. The swing area goes back to the swing highs right through here, and then we reversed it and made swing lows before moving to the upside. So on and so forth, similar to what the other swing level in trading yesterday. We did move above that level, only to find lose momentum and start to rotate back to the downside. So this area between 1.0965 to 75 will be the target to get to and through on the top side. So the levels are defined. The trading range for the week is still, tried the downside, tried the upside, failed on both, and now we're trading within this range here between the yellow and the red line right here. Let's take a look at the dollar versus yen next and see what that is telling us. And if we take a look at the hourly chart, we came down yesterday and fell below the 100-hour moving average early, I guess, in the New York session before rebounding back to the upside. And trading here today, we are trading above and below the 100-hour moving average. That moving average is moving to the upside as a result of this sharp move to the upside early in the year, or at the end of last year and the beginning of this year. We saw the yields move lower, and that pushed the dollar yen lower yesterday. But we are seeing yields move higher again today, and so we're moving back to the upside. I will also say technically that the low price in trading here today did find support buyers early against the key 200-day moving average. Level comes in at 143.31. As long as the price remains above that level, that's more bullish. On the top side, we do need to get back above the 100-hour moving average, and then the 38.2% retracement. Those levels come in at 144.17, 144.70. Getting above those levels increases the bullish bias, and admittedly, the price moved above the 38.2% retracement in trading last week and in trading this week. Actually, this week, just at the opening on Monday's trade, the price was above that 38.2, but we did find resistance sellers against the 38.2 here. So we need to get back above that 38.2% retracement to prove that this trend move from the November high down to the December low can get above the 38.2% retracement and stay above that level. Again, last week the price did move above that level, but fell short of the 50% retracement level. On the downside, if this 100-hour moving average does hold, getting below the 200-day moving average, and then the 200-hour moving average would be the targets that would need to be broken to increase the bearish bias for this currency pair. Finally, let's take a look at the sterling versus US dollar. This currency pair has been choppy of late, and not necessarily paying attention to some of the technical levels, but in trading on Friday, the price came up to test the other high price going back to this day right here. That forms this ceiling, and trading yesterday we got within about 4 or 5 pips of that high at the 127.71 and found willing sellers against that level. And trading here today, the high in the early Asian session did find resistance sellers again early against that level before moving to the downside. Admittedly, the price did move below the 200-hour moving average. It's a green line in this chart, but fell short of the 100-hour moving average, rising 100-hour moving average. So this area right here is going to be support. And if the price can stay above this level, the buyers remain more in control. If the price moves below this level, then the bias tilts back to the downside as the market continues its ups and downs, trading in a very wide trading range here. So pay attention to this level as support on the downside. This level area right here is losing its mojo in my mind. Lots of ups and downs around the level, not really paying attention to it that much. But yeah, we did just reach a high of 127.35. We can get above that level. We'll give it a little shot here as a level as a resistance that would tilt the bias back to the upside. So there you have it. A look at 3 of the major currency pairs as we start the U.S. trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.